Hi, my name is Greg Weldon. I am the publisher, producer, writer, technician, head trader. We do it all here, including taking out the garbage at night. For the Global Macro Strategy Report, I've been in the business. This will be my 42nd year. Started on the Florida Commodities Exchange in the Silver Pit in the World Trade Center. Moved up to the institutional side with Lehman Brothers. Then moved to the hedge fund side with More Capital and Commodity Corporation, two stealth yet highly successful hedge funds in New York City back in the 1990s, and been doing this now for 28 years. Every year I do my year ahead outlook, and the last couple of years we've really nailed this. I mean, over time we've had some phenomenal calls, but it's about what have you done for me lately, and thus it's about the January 2026 year ahead outlook special. Make sure you get your copy. I'm going to run through it here a little bit, give you a preview, and talk about 2024. Because actually, I look back, it's at 2025, 2026. 2024, I mean, it's more applicable now than it was in 2024, and it was right on in 2024. All of these themes continue to intensify 2 years later and will make the final cut in the 2026 year ahead special. Let's talk about the 2024 year ahead outlook 2 years ago. What did I say? One of the major things I said, we usually have trades, we have themes, we have macro, we have surprises. Some of the major themes here that were really the top-down secular in nature would be, number one, U.S. no longer willing to push democracy or capitalism on the rest of the world and will no longer serve as the military police to the world. Now you may say, well, they're still involved. Yeah, still involved in Venezuela. That's near term. That's more of a national security issue, if you ask me, frankly, no doubt about it. But when you're talking about sending troops to Gaza, sending troops to Cambodia, sending troops to the Ukraine, we're not doing that. We're not running around trying to be the military police. We're trying to solve problems in that sense. All right. Europe is now remilitarizing. That fits right in with this because we're no longer willing to protect Europe. We're no longer willing to be the military police to the world. We got to kind of look within. Number two, feeds off of that, the U.S. currency living on borrowed time. China's going to play the currency card. This is happening, man, right now. It's happening right now, this week, last week, the week before. This is in play 2 years later in the biggest way yet, and it has evolved right in front of our eyes over the last 2 years. Nailed it. And then the capitalism would begin to show cracks, and that's no doubt happening. And I said this back in the 80s when I was in the World Trade Center working on the commodities floor. We used to have these discussions. Say, look, this is when the Berlin Wall was falling. Communism was failing. Reagan had beaten it. But at the same time, the new debt, the trend since we closed the gold window in 1971 was for debt. And to basically, the polarization of wealth is now the most important and really violent macro trend out there over the last 50 years. And I said in the 80s, you'll reach a point where the have-nots rise up against the haves. Now we call it the one percenters and rebel. And you're there, man. You're there. So this dynamic, all three of these things that I said 2 years ago are just as, if not more pertinent today. In the sense of what's happened over the last 2 years, producing research and running my own hedge fund, which is really a managed accounts through the Series 3 as a commodity trading advisor. Okay, over the last 2 years, this program, which was designed precisely for this environment, inflation buster, protect the devaluation and debasement of the purchasing power of your wealth, income, and money. And it's done exactly that. Over the last 2 years, a 58.2% after fees. Credit investors only. The account, you open an account with the broker. I have no say in the money. The money's not commingled. It's held in your name. And full transparency. Every single day from the broker, I receive no other income. Whether it's the platform you use, the brokerage accounts, or nothing. It's straight up as transparent, simple, and protective as it can be. There's no guarantees, but this really, my clients love it. I mean, they love it. They want to see they want to see where we are, positions, money, every day. It's open to you, fully transparent. Now, let's talk about where we've come from and where we're going, because really the biggest picture dynamic here is the black hole, the debt black hole. And this goes back to 2008. It goes back to 2006 when I wrote my book called Trading Bootcamp. I said this was coming. I said the government would be forced to buy public debt, monetize public debt, and print no money to do it, to face the housing and consumer crisis that was coming. That was 2006. And it came. And they did. And that's when everything changed. That's when we crossed the macro event horizon. If you know anything about a black hole, once you cross the event horizon line, you are trapped. You can't generate enough propulsion to escape the gravitational pull. All right? That accelerated in 2020. And now we're deeper and deeper into the black hole. We have no chance of escaping. We need growth to service the debt. We can't get more growth without more debt. It's that simple. This is a must. There will do more QE. They will do more of these kinds of things. And again, it's back on the debt, and we use the sand and the seesaw analogy. All right, you got a seesaw. The angles of stabilization is actually a phrase in physics that determines when do you reach this. And this comes from the old Pete Seeger quote. You want to change things. It takes time. It takes a lot of effort and time. It takes sand on a seesaw. You keep putting the tablespoon. At some point, you got enough sand where the distribution shifts and the stabilization angles flip, and the seesaw moves the other way. It's another analogy akin to the black hole. It's Mission Impossible. Teaspoons of sand. Where it's too late to do anything but the same thing. Then we have China. I've been talking about this since 2018 when China opened the Shanghai Crude Oil Futures Exchange using the Dubai OPEC grade of crude to trade and priced it in renminbi and got Russia to benchmark their Urals crude grade to this contract. It was the beginning of the end for the dollar. The petrodollar, the seigniorage, the reserve currency, all these dynamics are eroding right in front of us, right? Let alone the G playing the long game, playing above the rim. Rare earths is a big part of this. I did a special on rare earths not too long ago. If you want to, be happy to send it to you. This is critical. I'm not going to get into why. Check my X feed to see where we're at with that in terms of how important REEs are to the future, in terms of space travel, in terms of all the things that are going to be important to our survival. All right, China, manifest destiny. Xi has been groomed since he was 6 when his father was killed during an assassination attempt on Mao. He's the guy. And this is all about trade. It's a world war already. Talk about World War III coming. It's here. We've been fighting it since 2018. It's a resource and commodity world war. And in terms of China, it's a manifest destiny dynamic to secure their resources from the Middle East, in terms of the shipping, in terms of who they get it from, in terms of all these things, the ports. This all ties in with Russia, with Ukraine, with wheat, with ports on the Black Sea to ship out through the canals here to get into the Indian Ocean. All of this is key. And then you start, who is it? Well, it's the Philippines. Why? They got fishing rights. It's Vietnam. Why? Because they got natural gas and oil drilling rights. It's resources. And it's Taiwan, South Korea, and Japan for other reasons because, of course, this is geographical in many ways, and it's history in many ways with both Taiwan and Japan. Then we talk about, all the things that are kind of de-dollarizing. And it's all of this. I'm not going to go through that. You can kind of stop and look at some of those articles. But then you have that side of the world, basically unifying while this side of the world, we're ripping ourselves apart. It's this side of the world against that side of the world. And that side of the world is winning because they're becoming more unified. They're becoming more focused on what the big deal is, which is global commodities and resources. That plays into the dollar. So as the dollar breaks down, we're already in a situation here in the U.S. where you have the debt black hole. The consumer has his own debt black hole because personal consumption expenditures are greater than personal income, disposable personal income. That's upside down since the pandemic. So in that context, you think, well, you have huge record amounts of credit card debt. All right, you have a situation where savings is less than credit card debt. And now you have delinquencies on credit card debt rising, auto loans at new highs, credit cards themselves, second highest only since 2009 global financial crisis. You have a housing crisis. You have real income that's basically zero when you take income relative to inflation. You have inflation that remains high, 3 to 5% on 60% of services. The Fed's not going to win the inflation game. And now you have a labor market that's deflating nominally and rapidly, and yet poised to deflate even more aggressively in the future. Can you imagine a social unrest among the have-nots when they can't afford food? Because food's going to be higher. There's a La Nina coming. You have global warming. All this stuff impacts the commodity markets to the point where these resources will become increasingly valuable, and you need to be involved in them to keep pace. Said the dollar down when it was trading 102.30, 102.40, last at 97.92, and really just now breaking down. It had this last gasp rally, and then, when everyone else is cutting rates and the U.S. wasn't, and that's faded, and it's gone, and it's toast. The real way to measure the purchasing power of the dollar, in my mind, is through an ounce of gold. We measure it in every currency. Right now, all right, 2 years ago, I said this was going to be a very bearish situation for the dollar and very bullish for gold because the dollar index has been compromised technically, and it was. And it was trading 5 cents on the 1973 dollar. Well, guess what? 2 years later, it's trading 2.1 cents, 2.2, 2.1 cents on the dollar. It's down by more than half from 2 years ago. Did you keep up return-wise with the 56.4% decline in the purchasing power of your currency if you're in the U.S.? My managed accounts program did. We seem to outperform it, and we've outperformed it. This year, done even better, in terms of our 58.2% return over the last 2 years after fees. That's net to investors. And I said in 2024 that, the gold-dollar rate relationship was breaking down in secular nature. You could see this long-term trend line that so well defines monetary policy moves and the purchasing power of the dollar, and you could see the collapse, that 56% decline. This is de-dollarization right here in one picture. I would say then, how low could the real dollar go? I mean, the nominal dollar, I should say. The real dollar is the one that's lower. How low can the nominal dollar go? Well, each time you get QE, you kind of see this dynamic around QE, and they basically, kind of drives the dollar lower. All right, boost the pandemic. There's the QE, and here's the moves in the dollar. So the dynamic is that the gold adjusted dollar index is saying you can get to 65. You're at 95. That's a 30% decline. What's interesting to me is the long-term secular wave count going back to the 70s in the dollar says the same thing, says sub 70, because this is the whole dollar bear market. You have the Plaza Accord. I remember that day very well working on the COMEX, the Plaza Accord, when the world said the dollar can't be stronger or it'll choke the economy. Now it's a whole different reason, but the same dynamic of the ABC Fibonacci counter-trend rally that the dollar has had since 2011 is about to end, is breaking down. Here's the 14-year uptrend. 2-year and 5-year moving average is crossing over. The oscillator is bearish. The real depreciation of the dollar is only just now beginning. It will stoke inflation higher. The debasement in the labor market is already happening. It's AI-related. It's secular in nation, too. You're going to face stagflation. And the Fed will be forced to choose to acquiesce to higher inflation, and that means higher gold, lower dollar. Coming into 2026, we're really watching this level in the dollar here at 96.21. That holds the key, and de-dollarization will continue, a new secular trend that's already begun. What's interesting, though, is you have another big trend that's coinciding with this, of course, which is a long-term breakout and upward move, bullish move in the Chinese renminbi. It's going to 6.8 easy, if not 6.50, if not 6, when you look at the long-term chart of the renminbi. And what's interesting about this, too, is I might point out that renminbi would be stronger just on a mere simple correlation to the fact that they hold more and have increased their allocation in the percentage of their foreign exchange reserves to gold, as opposed to the dollar, which remains in dollars and treasuries. I mean, this is another reason to hold renminbi instead of dollars if you're international, because they're more backing their currency by the gold than we are by far, and moving to do it even more. I mean, they've been the biggest buyer of gold in the world over the last 2 years. And of course, then there's gold. I said you close above 2,100 on a weekly closing basis, that you need to be long gold. 2 years ago, it's more than doubled since then. This is the same chart. And look at it now compared to where it was then. I mean, this is the reason to be a subscriber to the Global Macro Strategy Report, if for any other reason. Now, it's funny because when I put it out there 2 years ago, I was looking for 26.50. I got a lot of pushback. And it turns out I wasn't bullish enough. Though I did nail it in terms of this comment right here, that from the time that our oscillators and all of our work turned bullish, that was all we needed was the technical confirmation of the fundamental situation. And when the two meld, that's when we pounce. From 1768 in November 2022, our upside target was for almost $1,000 move to 2650, and people were like, kind of like, "Are you out of your mind?" Well, and so on and so forth. I was out of my mind. I was way too tame. All right, obviously, I like to say I was wrong, even though we were way right, but I was wrong. It went a lot higher. And this is why I don't like to do projections. All these interviews, they want, well, where do you project that going? What's your upside target? I don't do this. Why? Because you sell yourself short every time. You can't cap your gains. That's one of the biggest things in trading. Do you think I got out at 2650? No way, no how. We've ridden it the whole way. The last thing I'll point out, of course, is crypto. Now, this has changed a little bit because crypto has become institutionalized, becoming an ETF. At first, we don't want to be the dollar or gold. We're different. But then they use a gold coin with a $B sign. All right, you're not really different. Then they say we don't want to be regulated. That's deregulation is the big selling point until we got hundreds of millions of dollars, hacked. All of a sudden they want regulation. Then they say we don't want to be mainstream. We don't want to be in, with the JP Morgans of the world. And the next thing you know, they want in because that's the only way we get it to $100,000. And so they got in. Now it's a stock. And this is why it hasn't performed as well. Having said that, it's still valuable. This whole argument, debate, name calling over whether to hold gold or Bitcoin is stupid. It's all about clicks on social media. It's not the real world. In the real world, you want all four. More so, what do you want? Well, Bitcoin did rally from when I said it would, 44,000, went to 127,000. Here's gold again. How did we get back there? There we go. Went the wrong way. And today, 2 years later, there you go. You're 127,000. But more than any of these, this is why you want to have some investment in commodities. I offer my services in that vein to accredited investors only. Certainly the GMSR is something that everyone can use. We have clients of every type, from the largest hedge fund in this country is one of my clients, to a retired individual 20 miles away from me who is 88 who loves reading the GMSR. All right. At the very least, get my 2026 year ahead outlook. Shoot me an email now, because once it's published, we're shutting it down. So get ahead of the game and stay ahead of the game with the GMSR.